Hello and welcome to the Trading Zone. I'm Joe Tigay of Equity Armor Investments. Hope you're having a great start to the week. With me, as always, is Brian Stutland. Brian, happy Monday. The Bears won this weekend. They're not winning in the market today. Can't believe it. We're week 12 and the Bears are in first place in the division. It's just bizarro world.
It's sometimes miracles happen, right, Joe?
It's the Ben Johnson effect. It's just we're letting you have him.
Yeah, he's quite the coach. It's been great in the sports world. Heading into Thanksgiving here, my Bears are in first place. Michigan will play Ohio State for a shot at least playing in the Big Ten championship, maybe depending on the Oregon game.
Yeah,
or at least knock Ohio State. I'd be happy about that.
Yeah, well, you can't get it all, but I'll be happy for you either way.
Yeah, right.
The Lions are going to catch up here. We know it. We're coming.
As people kind of trickle in here, we got a great show today. As you know, on the Trading Zone, we're talking here about volatility. We're talking about sort of the macro look on the markets. And Joe, we got a trade at the end of the show, right?
We got a trade at the end of the show. Make sure you stick around to it. It's going to be looking at Black Friday / Cyber Monday. I think it's a really good just opportunity here, especially given where the market's at today, given where volatility is at today. We're going to break all that down and look at it all. You know, Brian and I were talking before the show. We were just like, we had this huge spike last week. Like, can we really pin it on any one thing? It was just kind of a risk off, just massive event happening with the VIX hitting 28 here just for a hot minute. And, maybe it was the Bitcoin correction. Maybe it was just saying, hey, some of these AI names have just gone too far too fast. And we had a little bit of a risk off event. We'll see if it materializes anything further, but absolutely the VIX was super high last week. And sometimes there's a saying, when the VIX is high, it's time to buy.
I would have expected the VIX, the way the market was moving, to get into the 30s. I was kind of surprised it only kind of fell short around 27, is now backed off. So
the contrarian to me is saying it was at 28 into Thanksgiving week. It's a half week, basically. Lots of low volume coming on this week. So given the fact that, we're not expecting a ton of movement this week, given that people are on vacation, VIX at 28 is pretty steep.
Yeah, I think if we didn't have a shortened trading day, I think that's right. Now, remember, when you calculate the VIX and volatility, or any option contract, that is, here's a little lesson is, Thursday, Thanksgiving, nothing's trading. Friday is a half day. So there's just less ability for the markets to move price movement wise. And what option traders do is they take the premium of options down to discount that. So maybe the real VIX was up right around 30, or could have been, had we not had a holiday coming up in that calculation. So, certainly back and forth moving. We're seeing the VIX back off now. We'll see where it goes. I think when we take a look at sort of where the skew in the S&P is, it's still somewhat elevated. But before we even get into that, you look at the MOVE index here. I've been talking about this a lot, actually. The MOVE index calculates volatility in the bond market. Somewhat off the lows, but still historically very low. So, Joe, doesn't that mean we've got liquidity in the system? We're not really.
The Fed's doing work. I mean, we're worried that we're not cutting like aggressively. We're not doing more to help the economy out. I mean, it just seems like that's always the case. Financial markets want just free juice from the Fed, but the Fed is adding some liquidity absolutely to the marketplace. We're cutting rates, so we're ending quantitative tightening. There is no question that liquidity is being added. And it's not only with the U.S. central bank, it's central banks around the world. And we've been talking about this really since April, Brian, that there's just been this like massive liquidity pushing into the marketplace. And absolutely, this has been the story here. We had this little hiccup in April with the tariff tantrum, if you want to call it. And it's just been downhill since then. Everybody around the world has been pushing liquidity out there. Bonds have just been suppressed. You saw gold lead the way with the reflation trade, I guess, if you want to call it. And really everything is following along with that.
Do you foresee, though, a little bit of a head and shoulders bottom formation here in the MOVE index? I mean, and we always like talking technicals, right, Joe? So
I think, I could see what you're looking at here. Maybe a little something like this.
Yeah. And, but what would be the event? Anything on the horizon you think that moves bond volatility significantly higher? Is it the circular trade and the AI play that does it? Is it over leverage in cryptocurrency? Or is there something else bigger going on?
Yeah, and we're going to be talking about all those events. Those are just events that are out there. They are big risks. Eventually, we're going to see hiccups in the market, like we saw. What was it, a 4 or 5% hiccup recently in the market? That's just expected. Like in these bull runs, we talk about the 90s. We compare that a lot. There were plenty of corrections while the market was having a 600% gain. So we just expect that, live with that. Volatility, it's not your enemy, it's your friend. We just got to recognize the trends for what they are.
All right, so we'll be watching the move index. Maybe a break to like 90 or whatever would complete that head and shoulders bottom. When you're looking at the skew here, this is like the level of volatility relative to on the puts relative to calls. And you take a look at this backing off its high, similar to how the VIX has kind of moved. Interestingly enough, normally this is kind of like a leading indicator to like the bottom of the market, where we'll see like this big shift where puts get pushed down and call premiums get pushed up. And so then the skew index comes down faster than the VIX. We haven't seen that. And that's why I'm still a little tentative that we've really made a true bottom in the market just yet. Feels like maybe we need one more sort of washout and then a quick shift in the skew index to say, okay, the bull market is back up.
I don't know. It seems there are plenty of instances here where this just starts lower and stays lower, like here. I mean, I think you're looking for a little something shake up like here, maybe. Maybe this was a big fake out there. So yeah, this is just something to watch closely. If this does turn around, that will be something we take note of.
Yeah, I mean, that's a really good point, that once the skew kind of shifts downward or flattens, that is, it doesn't really stop so quickly. Like that momentum goes pretty fast in the options market, and it takes something else to trigger it, the skew steepening again. So that's a really good point.
Yeah, and maybe it's a week Black Friday could change things around. We get past Thanksgiving, go into a busier time of the year for trading wise. People will be rebalancing portfolios in December. Not a lot of tax loss harvesting this year. Maybe there will be some, but a lot of the stocks did quite well. But maybe some repositioning here, getting their portfolios ready for 2026. So there might be a little more activity. Maybe there's a chance, but December is usually a good quarter. Stocks have a tendency to do well during this Santa Claus time period, and the Black Friday sales have a tendency to do well also. So I will see. Maybe the volatility is onto something if that is the case. Here we are right now with the VIX futures curve. Still a discount here in a big way from where the front month is compared to the cash. And, that was the case last week. And we've seen some movement lower here, but it's some bigger movement lower here in the futures, Brad.
Yeah, it's interesting. The front month future, really, I mean,
they hate it.
Kind of smacked down. Yeah, they really don't like it at all. Which is kind of interesting.
And maybe the futures traders know something that we don't know too.
Yeah, I mean, futures traders are definitely expecting, if you look at that front tip, the VIX cash index itself, come down and then normalize with where the 1 month and 2 month curves of kind of like that shape curvature happens, which would mean option implied volatility would probably come down a little bit here. So I don't know. Well, we'll see if that continues. That's to me, that's very interesting that could remain at such a discount still.
Yeah, and it maybe there's an arb of people buying S&P vol and selling the front month future too. So as an options trader, I'm always looking at potential angles. So there's always multiple solutions to the puzzle here, and it's only in hindsight that we really know the answer. We'll get into that a little bit as we look at the S&P 500 charts, because there's some important stuff there, which is coming just a second. But yeah, it's Thanksgiving week. It's light volumes, all of that to be expected. You got the Black Friday. We do have a trade coming at the end of the show. Make sure you stick around to that. We'll be trading Black Friday stock. If you are a subscriber to our trading zone, you did get a bonus trade in your email today. So it's not going out to you if you're listening in here, but it is going out to the people who are the subscribers of the show. But as I mentioned, Brian, I don't want to waste too much time on that because we talked about it already. This is why it's so critical of a spot we're at right here. And this looks similar to a lot of charts. I don't want to, spend too much time on the S&P 500, but we're at the 50-day moving average apparently coming up here. And we had this little bit of a correction, and there's no denying the short-term trend is lower. We've kind of haven't really made like a relative higher high here. And we are below the medium to longer term trend at this 50-day moving average here. So there is still some pain to the downside. I need to see this conviction to the upside to feel aggressive or excited about buying upside calls or aggressive about being in the market. Don't get me wrong. I love being in the long market for the long term. It just seems that the market is in a little bit of a consolidation phase.
Yeah. I mean, look at, if you could kind of maybe draw a line straight across on that little double top, like end of October, beginning of November, we come down right to start November. Yeah. We've kind of got like that little move, and we haven't gotten below that low that it made in early, or we haven't gotten above that low that it made in early November right there. And that kind of is coinciding with the 50-day moving average, right, Joe? So
yeah,
technically that's probably an area where if you bought into the sell-off and you bought in of like, hey, buy when VIX is high, maybe here's a time to just like kind of look to rebalance.
Yeah, I mean, here's what I can say about the market. Last week, it was just kind of pain. It was like you would have an up day and you'd feel excited. Oh, the market's back. We're never going down again. And then by noon, like all the gains would be wiped out. So today, the fact that we've got a nice little rally in tech, we got a little bit of a risk on feel, even though Bitcoin's not feeling it at all. It feels a little bit better today. That maybe, hey, a little bit something feels better. We're not erasing these gains off of the get-go. Just Google still with a close to a 5% gain, leading the market higher here. So maybe there is just a little bit of feel good, but yeah, we do have to retake this 50-day moving average. That is really important for me. And, it's very similar across the board. If you go across these other indexes, a little bit more pain happened in the NASDAQ compared to the other charts. The circular trade around NVIDIA really got hit hard as people are just looking at valuations, questioning if OpenAI is going to be able to fulfill its obligations, especially questioning the hyperscaler circle of companies with debt. So that was something interesting and taking, of note. And that's healthy for this market to think about these things. If we're just going up every day, that is not necessarily healthy. So it's good that we saw this little bit of correction, maybe revaluing where money is going, maybe a little bit of a rotation into some healthier names here, absolutely healthy. And, the semiconductors, a bigger portion of all that too. And it's just all leading back to the same picture. The market fell below its 50-day moving averages. We need to retake them. We're very close. Now, I mentioned Google. Maybe the leadership of the market we're just starting to see the change of it. Like we had NVIDIA. NVIDIA was the leader really since 2001, Brian, in the market. Maybe a new leader is emerging out of the Mag 7, and we do have the Mag 7 above its 50-day moving average. That is a really good sign. And we, of course, we know we are being led absolutely by, hold on, I got a chart for it. We're being led by Google. Absolutely. There's no question about it. Google is the reason why the Mag 7 is above its 50-day moving average. Google was a company that was down, I think, 30% on the year in April, and is just now up 65% on the year. So it has had a tremendous run. It got past some legal issues. It's no longer considered a monopoly in Europe and America, and it just keeps on running. It just keeps on proving that they understand the future technology as good as anyone. And they got off to a false start on the chatbots. They were behind ChatGPT. Everyone said, "Oh, they're never going to be able to catch up." And Google's just like, "This is just cute. Like, this is great." And I don't think they took that seriously in the market. Like bash them for their Bard and their big mess ups originally. They didn't take that seriously because they were seeing bigger picture items here in the AI world. And yeah, they have taken that seriously now. They have Gemini 3, which people are saying is just better than ChatGPT across the board. And you know how much I love Google, Brian. I don't need to go into it. They're in a whole bunch of future tech, which I am a huge fan of.
Well, I think when you look at it, obviously they rolled out the Gemini 3, like you said. It's been getting rave reviews that it is maybe the leader in the LLM, which then makes you worry that all the other competitors are falling by the wayside, and they all have this circular debt payment thing going on. The other thing you can't really discount down the road is the compute power of the chip of NVIDIA, which has been really the leader, like you said, since 2021. And now the question is, and SMH, like even going back to that chart, really, you look at that and it's kind of lagging where relative to the Mag 7. I kind of wonder, are we getting to a point really here where Google, which is going down the path of quantum computing and making their own chips, along with Tesla doing the same thing, with automation in their driverless vehicles, by them making their own chips, are they moving away farther away from NVIDIA? What's weird is, I don't know if you've seen like the YouTube video when Musk and Jensen were in Saudi Arabia just recently at a tech conference, sitting side by side talking. It was like the most awkward feeling ever. Like Jensen's like, "Oh yeah, we text all the time," and Musk was like, "Yeah, sure we do." And it was kind of like, "Yeah, I'm not going to be you." I felt like it was like, Jensen, you can kiss my butt all you want, but at some point I'm not using your chip anymore, kind of thing. So I don't know if there's that kind of rotation that's going on, and that's why you're seeing new leadership from Broadcom, from Google, from Tesla, and then you're seeing some of these other names kind of fall a little bit by the wayside. NVIDIA and Microsoft not really moving and participating in the rally today. So that kind of makes you wonder a little bit what's going on there, and if there's going to be new leadership in sort of compute technology and processing speed.
Yeah, it's a great question. There at some point, does the technology like advance it, make it so NVIDIA is kind of, even though they're ahead, like kind of obsolete? Or if you get to quantum, does the type of like cloud computers you need like alongside the quantum change dramatically? And maybe Google's kind of leading that way, because you got to have like maybe a quantum brain in a data center and then a whole bunch of computers around it. Which you wouldn't need like 1,000, Maxwell GPUs. You can have the Google GPUs are surrounded by one Google quantum brain. I'm not sure, but yeah, it does stand to reason that NVIDIA is just kind of relying on the AI model training to need to be continued on their chips, and that's the question. Does that need to be NVIDIA? It's amazing to see a lot of the other hyperscaler names today, apart from NVIDIA, are looking fine. They're looking pretty strong. You're talking about Broadcom and Micron and
even AMD is up today 5%. With NVIDIA up only 1.8%, Microsoft up 75 basis points. Speaking of ChatGPT right now, with Google up 500 basis points. So there's a feel of rotation going on today for sure.
Yeah. Okay. So let's move on from that. Rotating into Google. It's just phenomenal movement. So yeah, let's we talk about this frequently. Just kind of a reminder, big picture. This is the potential here. Here's where we're at. If we're going to see a bubble, there are worse things in life to be forced to go through this 600% return that we're about to go through. Now, keep in mind, these are nasty corrections here. I talked about it. Like the market can have big corrections here. And the bubble really took off after these two big corrections here. It was the Russian debt crisis, the long-term capital management blowout. Central banks stepped up, added some liquidity, and boom. So maybe the liquidity is being added right now with the end of QT, or maybe something will happen which will add some liquidity as we go. But it just seems like the central banks are worried about popping the bubble. I think if you go back to the end of this happened to, like, the Fed popped the bubble at the end of the dot-com crisis. They started tightening, and that ended the whole party. So we're not at that stage where the Fed is tightening. So just kind of be reminiscent of that. And if we're kind of at the stage where if there was a problem, the Fed's going to step in and correct it and help us to the upside here. So,
if we are in that spot, though, I would have to say I'm probably looking to buy sell-offs right now, right? Like even if we might be like, let's say, end of June 96, where there's still maybe another like slight leg down in the middle of 96 there. Like it kind of like topped out, it came down, there was a little blip back up, maybe like we're seeing right now. Even if there's like another like 5% to the downside, somewhere in here, I'm probably a buyer. I think we probably get another 5% down move, but either way, somewhere in here, I'm looking to probably buy the market, because if you look from like this point on, what is that? Just looking at these charts here, it's probably another up 30-40%, right? Till the next significant move down. So the next 6 months could be very profitable I think if we just get like a big kind of like little shakeout here, get the weak hands out and the new leg starts going higher.
Yeah. Okay. 100% buying the dip. I fully on board with that. Let's talk about like the bears here. Speaking of Ben Johnson, the bearish case for the market has been Bitcoin. It's kind of a leading indicator. It's been getting crushed, and of course Nvidia. Just real quickly on these charts, we were talking about this morning, Brian. If we're looking to, we know a MicroStrategy. It's a Ponzi scheme, in my opinion. Don't think Bitcoin needs to go to zero just because there is a Ponzi scheme long it. We talked about how this likely needs to trade at a premium to Bitcoin, so it's not even worth shorting. If you were short Bitcoin, it'd probably be better to be short Bitcoin. But this is going to be something that's going to be dragging on indexes until they exit, and even a little bit after they exit, because people will need to rebalance because they are very likely going to be excluded from the MSCI indexing. They're very likely to be out of the NASDAQ, and that is going to be some pain that we have to fight through.
Yeah, I would say, I think the one thing though is the stock is finally back down to really the value of Bitcoin. And if you look at it, yeah, they have some other like software and they get some income revenue coming in, and they basically use that revenue to pay their convertible debts that they issued on their stock, which promised, so you're going to get 2x Bitcoin returns, because you're going to exercise my stock and I'm going to own more Bitcoin, whatever they were saying. I think what basically happened was it set up where the stock price was too high. They were issuing convertible debt that was never going to pay out. And what traders did were basically buy the convertible debt and buy puts on MicroStrategy until MicroStrategy value of the stock came down to the value of the Bitcoin. Because MicroStrategy is basically just a Bitcoin ETF right now. With hopefully they're not doing other leverage on the downside where they're going to need to buy more Bitcoin, and they don't have the capacity to do that. In other words, selling puts on Bitcoin without the ability to be able to buy more or have the funds to buy more. So there's risk to that. It's like a risky Bitcoin ETF. So now that we're here, I think what happened was people bought Bitcoin, bought puts in MicroStrategy, waited for that ARB to come together. Now that it has, I think they're probably unwinding their puts in MicroStrategy and having to sell their Bitcoin that they had, right? And that's what's pushed the price of Bitcoin probably down. So I think now we're in a level probably where some of that stabilizes here at 85,000, plus you get miners maybe coming offline because of electrical costs down at this level starts getting pretty excessive to be able to mine. So the supply numbers start to diminish to some degree. And so maybe we're reaching some sort of equilibrium here. But like I said, there is this, you don't know exactly what MicroStrategy has on the books on the further downside that they need to purchase on Bitcoin. I don't think they've come clean on that. I rather own something like IBIT as an ETF, or buy Bitcoin futures, or buy Bitcoin itself, and not hold MicroStrategy. And I think that's what it comes down to. And this little unwind is certainly creating some volatility, like we showed at the top of the show, where the VIX is seeing that spike.
I want nothing to do with Bitcoin until after this is out of the NASDAQ, because this is going to be more forced selling. This is going to be more pain. So
yeah,
maybe just if I owned it, I would have a covered call on, just take some time out. But yeah, really feel for the people who bought those convertible bonds, or who got into MicroStrategy way up here. It's just, they were buying some hype, I guess, expecting Bitcoin to keep on going higher. Maybe they get some leverage to the upside. I think that's what they would be hoping for. But absolute pain here. The fair value of this MicroStrategy at the time was a lot lower. So yeah, it's just not a name for me to want to own. Michael Saylor did a great job of selling this, made himself a ton of money, and did not do a great job for his shareholders, in my personal opinion.
Well, the people that bought the convertible bonds, though, remember, some got paid interest rates, some did not. It has probably been better than owning Bitcoin, right? Because Bitcoin has now come down versus where they would have bought Bitcoin at the time. So that trade has worked out. Where the losers have been the people that actually hold the physical Bitcoin because Bitcoin has been pressured downward because
no, if you bought if you bought it MicroStrategy here or
oh well, I mean
bought
yeah,
the
if you were
physical
a straight shareholder, but I'm talking about the convertible bondholders that bought the converts from MicroStrategy. They don't have risk to the stock unless it got above a certain level, which clearly it's never going to get above now. So if they're not getting any interest on their bonds, that's bad. If they're getting interest, they're like, fine, that's okay. But they're also would have bought, they were probably buying the convertible bonds as a synthetic way of buying Bitcoin. So they didn't have to actually buy Bitcoin. And now Bitcoin's come down. So that has worked out okay for them too.
Yeah, it's so easy to buy Bitcoin now. You can just buy it, on the ETFs now. Like there's no reason to touch that.
Yeah.
Okay, let's look at NVIDIA. Maybe there's a rotation from NVIDIA as the leader into Google. We'll see if that remains to be the case. But they're exceptionally getting hammered here, down 10%. They had fantastic earnings. They said they're still growing. Their PE is not outrageous, but again, this might be just something healthy. The market might be thinking, hey, you're not going to grow as fast as you said you were because we've seen what Google can do without your chips, and what maybe the future is maybe 3 or 4 years down the road. There's going to be a lot of other companies, a lot of other competitors, or less of a need for the most amazing AI training chips that you're selling. So that's a great question. We'll see if it plays out to be the case. But yeah, this torch seemingly has been passed on, and it's interesting to see. We got 10% correction here in NVIDIA in the market, maybe about a 5% correction. So it's interesting to see how that plays out.
Yeah, obviously this is tracking a lot with Bitcoin. Speaking of Bitcoin, and if miners are getting turned offline, people are going to need less NVIDIA chips to run their mining capacity as well, because there's obviously a play on that too. So that could be part of the downside here too.
Okay, so let's go into the trade of the day. Thank you all for sticking with us for our show. I hope you guys have enjoyed it all. Hope you're going to have a great Thanksgiving. I'm very thankful to be able to be a fund manager, to be able to talk about volatility, trade volatility, have the job that I have. Thankful for to be who I am in life as a father of 3 and a husband, and I get to work with Brian Stutland, one of the greatest traders in the world. So very thankful to be able to talk to you guys every week too. So we're going to be trading Walmart, and the thesis behind this trade is that the AI community, AI trade, has created a K-shaped economy. There is hope that this will level out and turn into an even economy for all. That might take some time for the AI trade to get working through all sectors of the economy. But while we're in this spot here, there are some winners, there are some losers. Walmart has very successfully owns the lower portion of the K. They are a discount store. They sell very affordable products, but they're chipping away very strongly into the higher end of the case. Some of the higher end customers are looking for prices. They are using their online shopping more and more. They had a great earnings report. They always do very well on Black Friday, and I'm looking forward to seeing them succeed even more on Cyber Monday too as we go across here. So the trade of the week is December put spread. We're going to be selling the December regular expiration 105-100 put spread, collecting $1.50, just a way to express my bullish view, but not really expecting stocks to be racing away through December. If they do, that's great. I'll be able to collect my $1.50. If we settle in here and trade sideways, I can still collect my $1.50 without stocks going any higher.
Yeah, that's a pretty good premium, actually, given the amount of time to expiration. If you look at the value, let's say you set cash aside just in case you got put to the stock at 105. Obviously, the 100 put stops you out, so you don't really technically need all that cash. But let's say you did. Mm-hmm. You're collecting over 1% in less than a month, right? So annualize that. You're talking about 12-15% annualized return on your money if you were to just if this trade set up and you never got exercised on. So not a bad trade. It's a trade where granted the stock is right at 105. So, this put could turn into the money, right? So we do need the stock to trend a little bit higher here for this to sort of play out. But then, you have the 100 strike that stops you out. So you're not completely at risk on this. So I do really like this trade. The payout's not maybe the greatest structure. I'm collecting 105. I'm risking $3.95. That would happen if the stock went below 100. So risk reward, it's kind of like you're betting on the favorite, right? But your point, Joe, Black Friday, Cyber Monday, double dipping, Walmart should probably hold up.
Yeah, hoping that it will, and we're also just expecting the market in general to consolidate here for December. As we maybe the end of December, we can kind of get through some of these stubborn highs, which we need to break through. But for the short term, I'm expecting just some consolidation here in the market as we're kind of figuring this whole thing out.
All right. Well, that about wraps up our show for the week. Every week here, we give a trade, we give ideas on the market, we talk volatility here on the Trading Zone. Thank you, Tradier, for putting this on for us here. Tune in every week, 1 p.m. Eastern, as you get back from lunch. We 12 p.m. Eastern, 11 Central. Tune in, eat your lunch, watch us, see what we got going on. We'll give you a trade next week too, I think, probably, most likely. All right, we'll catch you next Monday. Take care, everybody.
Peace.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.